Hello everybody and welcome in. We are back. The lighting in here is absolutely horrible. That does not help. Let's see if we can turn these LEDs down slightly. Does that make it any better? Not really. Hopefully this will be fine. I probably should have put the lighting on, but we'll deal with it. Let's just change LEDs. Okay, that is definitely not a vibe. Yeah, that'll do. That'll do. Right. Let's get too complicated with it anyways. Everybody, let me actually speak into the mic. That will probably help. Welcome back to the fourth episode now. This time round, it is a live analysis session, as it is a Saturday. I am unable to trade the markets because they're closed. So instead, we're going to be coming on here and just performing some top downs on some of the major pairs, showing you my outlook on what I think is going to happen in the coming week. And yeah, we'll just go from there. Obviously, any questions get thrown through into the chat. We'll also answer to anybody who, on top of that, wants to... I don't even know where I was going with that. Sorry, anybody who's watching this back, make sure you stay alert for our live streams. I believe that anybody who's subscribed does get a notification when we go live. If not, make sure you do have the notification bell on to not miss these. We're trying to do these multiple times a week. Obviously this one I have gone live at about 6:30 in the afternoon. However, usually throughout the week we're looking at around midday when we do have that London to New York overlap. The reason we're doing that is just because that is when the markets are the most volatile. So in my eyes, it's most logical to do it in that region, just so we have the best market conditions to trade. So I'm just going to give it one moment for everybody to get in, everybody to get the stream up and sorted, and then we will go and do some live analysis. So I'm distracted. I'm trying to also commentate this whilst making sure that everything is smooth on my end. I believe it is, but you can never be too certain. The lighting, I must say, it looks awful for some weird reason. Let me see if I can turn the brightness down slightly. If you bear with me. Brightness, let's try and turn it down. Does this help? No, not really. Great. Okay, right, we'll leave it there. I think that helps slightly. That will do for me. And as stated, let's try to take it away. I think it's just because it's a bit later on in the evening, whereas I would usually do it earlier, so there's not as much natural light coming through, whereas there usually would be. So anyway, let's not complain about that. Let's just crack on and start doing a top down. So first things first, I believe that I want to actually do... obviously, I've already got analysis on most of the major markets. However, I think if we just go to a different source, so for example, with the Australian dollar to the US dollar, I don't use a Wander, I usually use the other one. So let's just go through the majors, do a full top down, and see where we look, and then we'll make a note or a list of what our outlook is when it comes into the next week. So probably won't be as long as some of the streams we've done prior. Just because we can't sit and trade the live markets. It is going to be a case of just doing the top down on a few different markets, and then we'll probably see if there's any questions. If not, we will then look to round it up. So give it one more moment and then we can get straight into it. Okay, so Australian dollar to the US dollar. Let's take a look at this on the monthly. So what we're seeing here is that price was bullish in the market. Now this was the most previous bullish impulsive wave of that trend. So if you highlight that, obviously this should have been a protected low. And we could have looked inside of this for some form of point of interest. However, we're not too concerned with that as of right now. I think if I had to identify any region, obviously we do have the last buys to sell. So this is the last buy to sell candle that we would have highlighted And it does appear like we did sort of tap into this region, and after tapping the region, we did actually displace this high, or we came just about to, but it appears that there just wasn't enough demand in the market to really make that move happen. So all we need to worry about is the fact that we've had a displacement, we've had that break of structure, therefore this entire move down now becomes an impulsive wave lower. So we need to ask ourselves, where is price going to want to come to mitigate where in this region acts as unmitigated position. So we definitely have the very upper buy to sell as a supply zone. I'd also argue that we have this region, and then on top of that we have the most recent buy to sell in this region here, which it appears that price has obviously reacted to. Seeing that the wick taps into this, we probably would have had this zone above the wick, so round about that region. So we would have taken, you know, following the more fractal structure, this is the overall impulsive wave, but following the structure inside of this, so impulse, retrace, impulse, retrace, impulse, we would then identify the fractal impulsive wave, which of course acts as this. The other thing that's concerning me is the music has randomly just stopped for no apparent reason, and we're back, right? So that is the most recent impulsive wave in terms of fractal structure. In terms of this impulsive wave, obviously that is where we would have identified, yes. We would have also identified this point of interest just above the wick. And then I also would have identified probably this candle. Obviously we already know that price has blown through that, so we don't need to concern ourselves. What we can do is go down to a weekly, look inside of the reversal that we've had here, and obviously I see this straight away as a distribution. Why? What are the main laws for a distribution? Liquidity build-up, which all of these wicks represent, and then straight after that liquidity build-up, we see that price then has a clear push through, tapping into our zone that we wanted price to tap into. We could refine that further to above this wick. So you see that price pretty much does just about come to tap that zone, and the second it taps, we have a pretty much instant reversal. After that reversal, this should have been a protected low. So you see that we have a break of structure of the protected low. Now after we have that break of structure, price trades back up, which would have mitigated something in here. And after we had the break of structure, if we go down to a daily, we can sort of view this a bit more easily. We've had this as an impulsive wave down, like so. And then we could have argued that we'd identify our last buy to sell, which is pretty much from the bottom of there up. See, once again, price comes to quite perfectly mitigate that. Now, just to zoom in on why I've done that, is because we've had, from this bottom wick, that's where we've had the heavy buy up in order to mitigate the position. So this buy candle here had the purpose of pushing price up to the region it needed to in order to mitigate the supply zone that we were watching. So we've had a perfect tap into there. This in itself is a lower time frame distribution. So we've had this overall 3-box strategy. So we've had impulsive wave down, point of interest identified, and then Wyckoff inside the point of interest. And then inside of the distribution that we were seeing, we've had impulsive wave down, which came to displace the market and show signs of bearishness moving forward. We then took it as an impulsive wave, identified the last buy to sell. The reason this being relevant is because this is the move that came to mitigate the overall point of interest, and then price came perfectly to provide us with more Wyckoff in terms of building liquidity or building a level of inducement like we have seen, and then us having that high push through, wick in, and then after we have that push through, this is the move that comes to displace us. We then trade down, and you'll see that from here down to here becomes another impulsive wave lower, and then from this point we've obviously introduced a lot of supply into the market in order for price to continue trading down. Now I do quite like this move because we can see that it comes all the way up to ensure that everything up here now has been mitigated. So this entire last buy I'm not sure where we could have refined that to. In all fairness, I probably would have said that I wanted price to tap into this region where we see these wicks. It seems like if you look at the line there, price doesn't fully tap, which is unfortunate. But nonetheless, we see that price does sort of trade back into this lower time frame distribution. So in my eyes, there is no reason now for price to want to trade higher, because this move here, where we've traded up, cleared all the liquidity and manipulated people at the market, arguably has come to mitigate everything on the upside. So there's no longer any upside targets or objectives. So price should now be free to run us all the way down to our final target. Loving this stream. Can't wait to smash the mics this Monday. Yeah, hopefully it's going to be another good week. I've done plenty of preparation, plenty of analysis, so definitely ready to execute some trades on Monday or whenever they do play out. Definitely looking to capitalize on Australian dollar to the US dollar this week. That is great. I think it is, or I prefer trading these major markets, so your Australian dollar to US dollar. I feel like any pair that includes, you know, the euro, the Australian dollar, the Great British pound, or the US dollar is going to be very volatile and very nice to trade. So regardless, let's continue what the bias was. So in the overall scheme of things, we could have actually taken this entire move as an impulsive wave down, and then we would have looked inside of this impulsive wave and said, okay, we obviously have somewhere in here where we've had last buys to sell, which price has come to mitigate. If we put it at the very bottom of the candle, and I'll actually change all of this around. For the impulsive wave, there we go. I also probably would have highlighted this region in here, where I think I had highlighted already, and I believe that I did actually get caught out by this move, just because what's happened here is something that we like to see. Price has shown reaction from this zone, but what we've actually done is build up a lot of liquidity, because we know that even smart money traders themselves were probably looking to take sell positions from it. We've had a very high volume push through all of that to clear all of this liquidity, all of these highs representing that liquidity, and then we've come up to perfectly mitigate the zone higher. So change that to a point of interest, like so, and then I just represent this as a zone invalidation, just to show that the zone didn't hold. So I do really like this. Straight afterwards, we have introduced a lot of supply, as we would like to do when mitigating a zone. And then this right here represents our last buy to sell. And it seems as if, as we go lower now, and we start to focus on what price is doing recently. Okay, we've had a liquidity sweep here. Price hasn't actually come to really mitigate anything, so potentially we may argue that we want price to come higher. Potentially to actually mitigate this more refined zone. But what we could be seeing right now, evident by the fact that we've had the displacement of what should have been a fractal protected high. There we go. What are my thoughts on XAU to USD? I haven't actually looked at that market at all this weekend or this week, I don't believe, so we'll try get to that at some point in this stream, and I will let you know a bias, but I can't actually comment on that because I haven't actually checked it in a long time. Anyway, so yeah, with this we've had the displacement, so I'm just going to be watching this region down here, which could definitely be refined in all fairness, to the actual sort of like last buy to sell candle. Is it needing to be refined? Yes and no. Let's keep both zones on just to make sure. So this in itself is the overall sell to buy. But then the zone lower is the exact region, but we can even go lower to find the more precise region. Anyway, so what I'm trying to get at is my bias here is after we've had this displacement, this becomes a bullish impulsive wave. We'd like to then see price trade back down, mitigate a position inside the bullish impulsive wave, reversing us to take us higher, hopefully coming to bring us up to mitigate the position up here. So that is my bias as of right now is for price to reverse in here, trade higher. However, if we do see price drop through this zone, we can then shift back to bearish. So it all relies on what price is doing currently, I would say. Anyways, the other reason why it's nice for price to actually come down and mitigate this region is just because, so I could actually arguably refine to there. The other reason why it's nice for price to actually come and mitigate this is just because we've built up a lot of liquidity underneath here. So price, as you can see, the initial move down came to clear liquidity, and then we've been sort of building more liquidity in this region. So arguably, it would probably be nice to see some form of spring where we see price blow through these lows, have a full mitigation down here, and then take off higher. I would actually refine to this from here. To me, is the last sell to buy. It could be refined down here, but it doesn't matter. We've sort of got this region. We know that price is definitely maybe reacting, or we know that price has introduced demand here because we can see through price action that price is hesitant to do anything. Cool, look forward to it. In my opinion, it's looking good for sells. XAUUSD, I think that could make sense. There's a lot going on in the world. A lot of interest rates have been bumped up. Monetary policy at the moment is in somewhat or reaching somewhat of a scary position. Everybody believes that a recession may be inbound. So if so, obviously that may impact the markets massively, but we'll sort of deal with that when it arises. So the bias, hope to see price now reverse here, and in doing so, we're wanting to see this high get broken, and then once we do, or if we do, we can then start looking for buy positions. That is longer term, at least. We may be able to find some fractal buy positions as we go. But anyway, displacement required. Let's actually go lower and really see what's going on inside of here. Yeah, so the idea being, we've built up a region of liquidity in the market. If we just identify that, and what I believe would be nice to see is for price to now trade us through, blow through that liquidity, give us a deep and full mitigation, and then blow straight through, have some bullish structure to displace us, and then we can start looking for long entries to take price to either the previous high or the zone that we identified before as having relevance. So that's a bias. That is what I'm looking for on it. So if we just draw, just to remind ourselves, we're sort of looking for price to blow through liquidity, have a mitigation, continue trading bullish, and then look to go long from there. Don't mean to do that. So yeah, we can now remember our bias on this, remember overall what we want price to do, and arguably we want that to actually exceed the previous high. So that is exactly how we would go about a top down. Just work our way down, create a bias, and create a bias. Not the both things. Create a bias and create a story of what you want price to do. So short term, we want price to reverse in this region. We then want to buy price up into this zone. And then once price has got to that zone, we're then arguably hoping for price to reverse lower and take us all the way down past these lows, but then longer term all the way down to this final target. And that is just following the information that reading the structure has given me. So that is the Australian dollar. The US dollar, I believe, yeah, Kyoto said XAU to USD. So let's go on to that one next. And let's just do it on, I don't know which market it is that I've used to analyze. I assume not this one. Okay, so let's just zoom out and see what is happening. So obviously we're bearish. We've got impulse, retrace, impulse. So the argument being is, are we now approaching an overbought region of the market where price is struggling now to go higher after putting in this correctional wave? Are we now getting ready to sort of distribute? If that's the case, where inside of this region would we want to see price react to? To me, this sticks out straight away as a point of interest. Although remembering this is a gold market, so the likelihood of price falling this low is not likely at all. However, we may as well be prepared for anything and have this analysis drawn on regardless. That is pretty much the only zone lower that I'd like to see price react to. The other thing as to why this would be a nice position for us to be involved with is because of liquidity. Quite simply, we have a lot built up there, so seeing price blow through that. Let me actually just look at this wick to see what's happened. We've traded up. Yeah, we've had a nice sell back down, a heavy rally straight after. My concerns is whether that has already mitigated the zone, in which case maybe this would be our point of interest. Let's just go down to a lower time frame real quick and just see how price action in this region reacted. Now, I think it's actually valid for us to look inside that region as a demand zone, so let's just keep that there and carry on with the top down. Okay, so we've created market high, price then trades us back down. We do sort of hold, because arguably this region here, just at the very bottom of this liquidity level, is the protected low. So arguably we have actually held the protected low, and then we started to make a move higher. It's not fully surpassed this high, but potentially it will do in the near future. So making that assumption, making the assumption that price hasn't actually broken the previous low, so we can't assume that yet. Price is displaced and wants to go bearish, so our bias is still price to go bullish. So if we now go to the daily, for example, we can say that inside of the intermediary structure, we've gone impulse, retrace, impulse. This is the next retracement back down, which has protected the low. So we can argue that this, as of current, is a final target. So we want price to come and exceed this as a final target. There we are. So let's now look inside of here and say, well, where could price react to as a supply zone? I don't think it's likely for price to come all the way back down and create more liquidity unless it's wanting to clear it. So arguably I would have initially looked somewhere within this cell, which it seems like price did wick into and react to before making a slight move higher, but clearly didn't have enough demand to take us all the way. So if we were to be on a higher time frame, we'd be taking this entire region. So this entire sell before buy, but obviously we want to try and refine that zone more if possible. Point of interest demand, and then if we actually try to refine it, it does seem potentially there's a few zones here, so it's going to make it hard. There's no one zone that sticks out, so we might just have to look at refining every single one. So we have that region, and then we also have this region. So we get rid of this. I believe that one of these two regions are likely to act as a demand zone, where we can hopefully see price tap in and then start making a run higher. But as of right now, it seems like price is likely going to be bearish down into one of these regions. Yeah, that does look quite nice as a position to highlight. I think that this is going to be the most likely zone if it's going to react to anything. But regardless, looking now at the bearishness, it'd be very nice if price reacts to last buy to sell, which we have perfectly wicked into. So that is always nice to see. We would have, of course, taken this as an impulsive wave. Impulsive wave. Price has tapped into that. Let's go to a 1 hour and see what kind of price action it delivers when doing so. Yeah, very nice price action. Build liquidity. Show signs that we want to go lower before a high volume push in, which comes to mitigate the position. And actually, on this time frame, would have perfectly been refined to this level, which we see is the exact level where we get a tap. Now, looking inside of this, where can we then look for sells from here? Which to me is this entire region. The reason why is just because we're inside of this last buy, but then we've also got this wick, which also represents a region. So I'd say definitely somewhere in there we want to see sell positions from. However, after this tap, we've still not created a new lower low, so it's unconfirmed whether we're going to make a run for this POI now or later on. But regardless, I'm going to have an alert set at around, let's bang on 1900 actually. So we set that alert. 1900. looking for the tap there, and then we can also set that second alert at 1841. So that is going to be my overall bias, 1841. Pretty much just try and sell price down into one of the demand zones lower. From there, hope to see price reverse and make that move higher. Let's now look at another major pair. We'll go Great British Pound to US dollar. Awanda. Monthly. Make sure if you do have any questions to send them through in the chat. What we're going to do here is let's switch up the music a little bit. Let's see what we can be offered with this. Okay. I like it. I like it. We can go with that. We can roll with that. Potentially slightly too loud, maybe. I think that should be about fine. Let me put both headphones in and then. Yeah, no, I think that's about perfect in all fairness. Okay, regardless, let's carry on with the current analysis that we're looking at. So, if we zoom into this, this is the monthly time frame, very clearly bearish, to put it simply. We've had arguably correctional wave back up, but obviously we know that this was the very first move of the market. So impulse down to break the low, correctional wave back up to mitigate something before we then have another impulsive wave breaking the low. This becomes protected high. So as of current, following higher time frame structure, we have this range where we have protected high. Yeah, I forget, I don't actually have a template for protected high. So protected high right there. We can actually make that text a bit higher, a bit larger, not higher. And we would have looked inside of this as an impulsive wave, because we've seen that after we sort of had this point, we've had a lot of rejection higher. So we are arguably currently still within this as an impulsive wave. So let's just get that on, impulsive wave. And then inside of this, sort of what zones do we have to watch? We of course have our last bias to sell. The reason why this to me seems like institutional control is because we had a lot of liquidity build up in this region, and these buys are the main areas where we saw price push through and clear that liquidity. What does look nice is that price comes here to perfectly mitigate to the bottom of that wick to the top of this. This again, clear institutional control. Well, why? And that is because this wick comes to clear all of this liquidity in there, and when we're seeing a move that clears so much liquidity, it's very likely that we've had institutional control. So arguably we can say, and we do kind of know, that price already has reversed back up, and then from here we've had our next impulsive wave, because this has come to break structure. So we'll change that to break of structure, and then again we would have taken this as an impulsive wave. Let's actually go down to a weekly. We may be able to view the structure slightly easier. And this in here is our last buy to sell. Which we see price perfectly mitigate. Another region that we potentially would have highlighted is this down here. We can see that price does actually have some form of reaction to that, and then straight afterwards we have a liquidity clearance. We blow through, so a lot of manipulation in this region, but then after that obviously we have a heavy bull run which comes to mitigate this buy to sell, a clear Wyckofian distribution in this region. And now moving forward, we can expect that the price will potentially come to run this low following structural laws. So arguing that point, we want to be a seller to try and ride price down to that region. So we can follow this structure, this being a high, we trade down to a low, up to a high, you know, so on and so forth. We're obviously having clear bearish structure, put into the market, another low. So as of current, we can argue that this is the protected high on this time frame at least. Now we can go lower to a daily, for example, and we can look inside of this region. All of that's been mitigated. So we have a buy to sell in here, which is definitely going to act as a point of interest, like so. Obviously, because this is the most recent impulsive wave, it doesn't seem as if the impulsive wave is finished yet. But one thing I did want to state is just because of inside of this region, we can see that the most recent impulsive wave only just came to surpass the previous low, and the retracement was also very deep. You know, it came to almost match this region, so it seems like the bearishness is starting to lose control. There's not as much supply in the market. We can see that with the other impulsive waves, so the original impulsive wave, for example, it comes to exceed the previous low quite vastly, and then the correction wave does not come very deep at all. This next impulsive wave, same thing again, comes to break the previous low quite vastly, and then the retracement again is very shallow. However, the most recent impulsive wave lower has struggled to really surpass the previous low, and then the retracement has also come as deep as it possibly could without breaking structure. So taking that assumption, we may then decide, okay, we could try and have an earlier bias that price may want to react to something inside of this. Now, if we just replay this back, I do not want alert, I want to replay, and try and identify where arguably we have any unmitigated positions. Now, to me, everything inside of here has been mitigated apart from this region here. This little candle is arguably, for me, now going to be a demand zone that we could potentially see price have some form of reaction to. So let's bring this across, change it to a demand zone. Now we can start to be cautious as or if or when price begins to approach this level. But for now, obviously, we're still expecting price to at least trade us down into this region. So just go back to what we were doing, looking inside of here. Now it does appear that in the more fractal sense of things, we've had that impulse down, a correctional wave where the correctional wave ends here, and then because we broke the low, this fractally becomes a fractal protected high. Look inside of this, where it needs to be mitigated. Well, we can argue that we have this region as a supply zone, and then we could also go lower again and say, right, well, actually inside of this move down, we could actually argue that this has been the correction wave, another impulse which breaks at low. So we could say, okay, well, maybe this is actually the protected high now in even more fractal structure, and therefore we can look to identify this as a last buy to sell and a point of interest to watch. So let's do that. Yep, it seems like this exact zone in itself is one to watch. So something to pair alongside that is all of the liquidity that has been built up in this region. A lot of liquidity beneath the point of interest, as well as some market inefficiency. So it could be nice to see price move higher, surpass the level of liquidity, tap into that zone and make a move lower, or because we are evidently seeing a lot of rejection at this point in the market, we could need a wider scheme retracement, which would then look at this point of interest. If we blow through this and displace this fractal protected high, that's when we then start looking at this region, so on and so forth. So that's a bias currently for Great British Pound US dollar. Just want to make sure, does anybody have any questions about the analysis we've just done there, or about the bias we have just gained? Any questions at all? Just before we move on, just want to make sure. Take a look at Bitcoin. Okay, there is a suggestion. I've already got some analysis of Bitcoin. I actually did this for the Sunday sessions video, which will come out tomorrow. So I'll give a very quick insight into what I think on this. Pretty much my overall bias, ignore the extreme amount of analysis, which really ruins the overall outlook. But following the market on higher time frames, we are bullish. We've had this impulsive wave up, correctional wave, which holds the market low, which is actually down here. We hold the low, we then come to break the high, so clear bullish structure. We've come back down, held this new protected low. So sorry, I'll get rid of this. I'll move this along, and then we can actually update this by taking another one of these and arguing that this low has been held. Price has come to tap into that demand zone. When it then taps into this demand zone, we see that we come to displace the high, which again was showing signs of a reversal. So in the larger scheme of things, this is pointing towards a move higher. After doing that, we then come to mitigate a zone left over from this. Now the reason I like this zone is because obviously we had an accumulation in the zone to actually reverse the market higher, and we never came to fully test or tap and mitigate the spring of the accumulation, so I took that as a zone. Again, we saw price tap in and slowly make a move higher to break structure, and then price has traded us back down again and is currently holding inside of another demand zone. Now the thing that I don't like in the overall bias is the fact that price is, like we were saying about the last market, it's not breaking the previous highs by a lot, and the retracements are very deep. So it's not a sign that there's a whole load of demand in the market. Maybe we need something fundamentally to really shift the bias on that and bring us more demand into the market to make that move. Because from viewing the supply and demand balance in the market, I was arguing that maybe it could actually be wise for us to start looking at supply zones to sell from in early preparation for the overall trend to be broken. So that's what we've done here. We're going to see if price reverses in this demand zone. If it doesn't, we can then just start to look to go short for the foreseeable future. But we've already seen some reaction in the zone. I'll go down to lower time frame in a minute. But yeah, we've already seen some reaction to this zone. So I think the price is going to start running higher, clearing all of this liquidity, where we then may be able to find some supply in this region. If not, we have the region here. Again, if not, we have another region inside of here, which could act as a supply zone. And again, if we have too much demand in the market, then we may just come to reach that final target and ultimately continue the bullishness that we are seeing on that higher time frame. So although structural laws are telling us that we should be going long, we should be expecting price to exceed the final target, and we also have to do some fundamental analysis and say, right, well, Bitcoin isn't as strong at the moment. The hype for it has definitely diminished, and when we set this market high, there was a lot of hype for this market. So us being able to trade back up there may need another fundamental drive. And is it likely that Bitcoin is going to gain or regain that hype that it once had? Maybe not. So that is my analysis overall. I'll show you how we're actually looking to tackle this in intermediary style. So we had a displacement after setting the market high and seeing a clear distribution at the market high. We then saw price traders back up as a correction wave to mitigate the last buy to sell. After that mitigation, we've just had the clear run lower. We were looking for more positions inside of here to try and take trades from. We had another zone that it reacted to, did blow through slightly. Another zone that price reacted to, again, another zone that price reacted to. So many actual opportunities to get in short here. But now that price is reacting, I feel like we're at a pivotal moment. Either we're going to accumulate in here and start running higher, or we're going to see price blow through this, in which case we're going to see price go bearish for the foreseeable future. But following structural laws, I think we should be bullish. So I hope that answers questions. If there's any questions you do have about the analysis or the explanation I've given, make sure to ask so I can clear that up. And on top of that, if I may ask anybody who's new to the streams to leave us a subscription, because we literally do videos like this, our Sunday sessions, which come out every Sunday, which give both mine and Luke's outlook on the market, where we go a bit more in depth and show you what our outlook and how we're looking to tackle those markets in the coming week. We also have our Learn to Trade series, which runs over certain concepts within both of our strategies in more detail, and then also the Trading Couch, which is a bit more relaxed, more of a podcast style between me and Luke, where we just have a nice little chat about certain issues. But it appears like nobody has any pressing questions about this analysis we've just done for Bitcoin, so we will look to potentially move on. I'll just give another minute for any questions in case anybody does have any. Get them sent through now, just about the analysis we've done. No, does not appear so. So let's go over to a different market now. So we've done Australian dollar, US dollar, and we went on to pound dollar, did we? No, we went on to gold, and now Bitcoin. So that's 4 markets done. Any other suggestions before we move on? I think one I want to look at, because I haven't done so in a long time, is the dollar to Swiss franc. If anyone does have suggestions for markets to analyse, make sure to send them through. Okay, right, so in this market, it's given us a rather unconfirmed, because we've broken the high, put in place bullish structure, then broken the low, put in place bearish structure. So at the moment, in the very higher time frame scheme of things, this right here is our impulsive wave, because we've still not broken this low. So this is arguably still our higher time frame impulsive wave. Inside of this, where do we want to see mitigated? Well, straight away, I'm seeing a nice buy to sell in this region, which we'll look to refine momentarily. Great British Pound to US dollar. We literally just did that one before Bitcoin, but I can go back through the analysis and the bias I ended up gaining. This is the other zone. So these are 2 zones that arguably I'd be wanting price to react to. Let's go down to no, we can probably refine it on the weekly, as a matter of fact. Okay, so the real sort of region, where do we clear some liquidity? Just analysing price action. I mean, arguably that entire zone, but I think from here is much more refined. A lot of inefficiency in here, which we may want to see get filled. The fact that we've also built up a lot of liquidity in this region, also another great sign that price may want to go higher and actually mitigate this zone. Liquidity, there we go. Now let's move slightly lower, because obviously inside of this we've had a market high set here. The low comes to break previous lows somewhere in these regions. We then trade back up, protect the high, displace the low. So we could now take this as the impulsive wave. With this as the current protected high. So we're inside of here. Would we like to see price mitigate? We'll probably have to do a bit more in depth, because the first zone was probably going to be somewhere in here. But now price is making this move. I believe everything inside of this potentially been mitigated. So because of all the liquidity in here that seems to get cleared, The only other region I think that looks nice to me is this buy to sell. That's quite a difficult impulsive wave to analyze in terms of positions like that. But obviously we've had this displacement in here, which has confirmed that a correctional wave is getting put in place. So obviously price is approaching this zone, so I think we may be able to confirm the future bias very soon in this market, because as stated, price is either going to mitigate this and make its move lower, or it's going to decide that it wants to run this liquidity, and if so, the final target for price is probably going to be in this zone where we should be able to distribute, reverse, and then come lower once again. So let's set a alert at this level, which is 9957. There we go. Let's take a drink again. Right, so we do have that. Now our bias on this time frame, so longer term, is for price reacting to there. But let's go lower and see if there's any opportunities we can take. Obviously price has been rallying extremely heavily, so it may be difficult. We're just going to have to keep going down because I'm still not really seeing anything. Okay, it appears like this at the moment. Probably go even lower. This right here is our impulsive wave, starting to get some rejection, so potentially price getting ready to distribute in the market. Impulsive wave, if that is the case, where can we say inside of this impulsive wave price would want to mitigate? Now to me, this is our sell candle here, our sell to buy, just because straight after that we also have some market inefficiency that has been left over. Love more Caetano, I hope I said that right. The Nasdaq, we can definitely check that one out after. So point of interest demand, I think I would actually like that as pretty much the only zone to see price mitigate. So I'm thinking, because we've got some liquidity built up in this region, we may see price do something along these lines where we clear liquidity, introduce a lot of momentum, and that momentum brings us all the way down to trade into this, where we sort of get an accumulation to then take price higher into this zone. So that's a bias. Oh god, I just got rid of the zone, but that is my current bias. I've both given you the longer and short term outlook. So liquidity region there, potentially see price blow through liquidity, mitigate this zone. This should introduce enough demand to take us into this higher time frame supply, which has the purpose of mitigating this position to then take price all the way lower. So we'll go the Nasdaq now. Now this is not a market that is as easy to analyze, because there's not as much structure that has been put in place. Obviously we just see a very large rally over time. So I'll have to zoom into more recent price action. And following this, if we just draw out the structure, for example, see price has displaced what should have been a protected low. From this move all the way down, we've then had the retracement of this newly created bearishness, which seems to tap into this region, so this candle, which we can actually just use rectangle tool for, which is probably way easier. So we have the tap into this as a point of interest. So let's just zoom in a bit more. We'll also get rid of the brush tools now, because we've just highlighted the structure we needed. So this would have been an impulsive wave lower from here down. That would have been our point of interest. We see price comes to mitigate the point of interest. We can start to now look for Wyckoff inside of that as we drop down. But now we've had that break of structure, so signs that we're putting in the next impulsive wave. So break of structure. obviously we would state that somewhere within this we have Wyckoff. There we go. Which comes to mitigate that position. We've broken structure now, so we can argue that inside of this, again, oh my God, I'm losing my will to speak. We again have an impulsive wave. So we look inside of this impulsive wave and we say, right, is there any supply zones or unmitigated positions that we'd like to see price react to? It's quite tough because we've got a lot of market gaps. That just could be because of the fact that whichever source or provider we have isn't giving us enough data. However, we can kind of gauge what the structure was saying. I'm actually going to go down slightly lower on the time frames. Why is it not letting me? Okay, here we go. This is a bit easier to view. I do quite like the idea of us having a position somewhere up in here that could act as supply. I'll tell you what we might have to do. Let's just find a better market for it. Okay, there we go. Yeah, this is way better. It's giving us the proper structure. So let's just quickly remind ourselves of what we were wanting to see. Apologies about that. But we said we had impulsive wave lower, which I believe, yeah, we said ended down here. I think we said this heavy buy here represented a zone that needed mitigating on the weekly time frame, which I was thinking we maybe could refine to that, but it doesn't seem like price actually tapped into that. So if we refine that too much, then we probably would have missed the tap in the first place. Obviously, break of structure. So we'd now take this as an impulsive wave. It doesn't seem like the impulsive wave is over yet, so we would continue to wait for price to play out until we get a fractal displacement, but I still want to give my outlook. And then it seems as if this right here is acting as a supply zone. Then is there anywhere else we could argue? Yes, we could definitely say that this region up at the top is also acting as a zone. So these are two zones that we'd want to see price eventually put a correctional wave back into. But if we go to what price is doing a bit more recently, we can see that it is still trading downwards, although there is evidently a lot of demand being introduced. So we could be seeing an accumulation in this region. This structure doesn't seem very easy to trade because we come to have somewhat of a liquidity sweep, but we are still sort of trading bearish. We're holding the highs to some extent and breaking the lows. So we could argue that following more fractal structure, we could see price now trade us back up into this, protect this high, and make another leg lower. So this would of course be the final target. So we could look to take a position from here and write it down. However, my overall bias would be for price to actually displace this and then trade us up into one of these points of interest. Okay, we've officially now been live for an hour. So I think what I'm going to do here is take a very short break just to go and get some coffee and prepare ourselves for the next hour of this stream. So whilst I'm away, if you have any questions, make sure to put them in the chat or any markets you'd like us to look at, and then when we get back we can look at ways to tackle them and also look at answering questions. Okay, well that's extremely annoying. I wanted to be right back on the screen, but it doesn't appear to let me change the colour of it. So yeah, just know we'll be back in 5 minutes. And we are back, ladies and gentlemen. So, has anybody sent through any market that they would like to see get analysed? We've just done the NASDAQ, the US 100, and we've done Bitcoin, gold, pound dollar, Australian dollar to US dollar. What the majors do we have? US dollar, yen, and euro to US dollar, I guess, are our main ones. Forex, yeah, these are our majors as we see at the top, or the most traded ones. So, I think we'll go with a US dollar yen. I think that alone says it all. Wow. There is absolutely no information to go off here. I'm sure the market goes back more. Yeah, this only starts from 2002, but I mean, from a top-down perspective, from what we're seeing here alone, all I can say is that price has cleared some liquidity, is clearly trading bullish now. So this being a protected low, price potentially wants to come and mitigate something lower. If that's the case, it's likely going to be this candle as a demand zone. I think the only other thing that we can really say, well, not much really. Let's go slightly deeper inside of this, just to view the structure inside. This can be refined down to this region. Okay, so yeah, I mean, we have this, which is the most recent. Wow. Yeah, this has really put into perspective how wild the recent rallies have been in this market. That is pretty much the only zone lower that potentially needed mitigating. Guess we could argue that the real last sell to buy of the entire move could be another. We've tapped into this one, starting to make moves higher. Obviously this is the final target. This is a market that's not much to analyze other than the fact that we know price is just trading bullish. It's something that we can't really look for longer term biases on, and we just sort of have to give what price or take what price is giving us in the moment, to be honest. Okay, so that mitigates that. So in terms of wider scheme retracement, let's check the 15-minute. Yeah, to me the only real reason would have been there. I mean, we can take the last sell to buy regardless. The main zone I would have been watching was inside of here, like this last sell, but it seems like that move lower mitigates that. So even more fractal structure would say that this is a protected low. Where inside of this do we want to see get mitigated? Potentially this last sell to buy, which has already been mitigated. So this becomes short-term final target. We want to see price tap through that. Let's go even lower and say, okay, well, we're inside of this move, needs mitigating. Okay, well, we have this, potentially see a mitigation of that. But that is about it. I mean, I'm going to set my alert here at 130.363. But other than that, the market is honestly not giving us a lot at all. At all. So that is about as much of a bias I can give you. Keep trading price bullish until we reach the final target. Potentially, if we displace any structure, it could be to come and mitigate this zone lower. But other than that, I'm out of ideas there completely. So make sure, again, if anyone has any questions, send them through, because we're sort of running out of markets now to analyse. So if there's any concepts you need me to explain through, now is a brilliant time to answer, for me to answer after you have asked those questions. So if there is anything you are confused about that you have seen out there on whether it be smart money concepts or potentially anything else to do with Forex, I will do my best to answer that, to give you more of an insight. Let's think on here, what else could we take a look at? Now it seems like as the stream has progressed, people have sort of swayed away. I'm guessing because it is a Saturday night. Most people right now are not wanting to come and do research and learn. A lot of people at this point are wanting to relax for the weekend, so I definitely don't blame people. I think here, regardless of the fact that not many people may be left in this live stream right now, there's still definitely been a lot of value that people can take away on the YouTube if ever you want to come back and watch this stream to see some of this analysis. Hopefully you've gained a nice insight onto these markets because I've of course provided us with both short, medium and longer term trading opportunities, which is what happens when you do a top down. So definitely be interesting to come back to these in, you know, maybe let's say a year's time and see how my bias and analysis was on the market and if it played correctly to that. But I think as of right now, the wise thing to do is probably just to end the stream before we overanalyze and start to really confuse our own minds with being in the markets for too long. So just to make sure, if anybody is here that has any remaining questions, make sure to tell me, but if not, we will look to wrap this up. Does not appear so, in which case thank you everybody who has tuned in for watching this and for chilling alongside with me and giving me some markets to analyze. I hope you've enjoyed the analysis that we have done, the outlooks I have given. To anybody who watches over on the YouTube, also hope you've enjoyed this, and if you aren't already, make sure you subscribe so you can actually get a notification when we do these live streams through the week where we do live trading. So you get a bit more information there because you can actually look to see how I'm executing trades and see exactly where I'm profiting, where I'm losing, and what's happening overall with my trading career. So thank you to all the regulars that have tuned in. Kyoto, it's always good to see you. Love more Kitano on Australian dollar to Japanese yen. I'm looking to take a short. Can you analyze if possible? Australian dollar to Japanese yen. Let's take a look at this one. Don't think this is a market I've ever traded. Well, apparently I have. There's some form of zone left there from my early trading days. Okay, so a very range bound market, which is giving us different bias. So let me just try and get my head around this and I'll start to explain exactly what it is I'm seeing. Okay. It's definitely a ranging market. It seems like where we've wicked here, is there a potential zone that we've come to mitigate inside of this? Potentially reacted to this region. That is the only region inside that I can imagine, so we'll see if it taps into this. If not, okay, it does. I was going to say, if not, I'm not sure what it reacted to, and it may not actually reacted to a demand zone. Regardless, let's continue with the bias. Following overall structure, we've had impulse, correction, impulse, correction, impulse. We have come now to break that previous protected high. The reason it was protected is because we broke this low. So the second we broke that low, this high should have been protected. So from here, we should now start to trade bullish. And then the question from there is, where do we want to react to if we are trading bullish. So getting a bit rejection there. To be honest, I would probably like to see price react to this. Let's just take a look. As a point of interest, we will slowly work down the time frame, so you will start to see what my bias is shorter term. I can't actually see what's happened here, but it does seem as if we've had a very heavy buy there before we've come back down, and price never sort of returned to said area. So potentially that wick could represent some form of position that needed mitigating. We'll just see how price reacts to that. No, it blew through that, so it's likely that that wasn't a zone to watch. So I'm not concerned myself with that too much, but my overall bias is probably for price to trade up into this point of interest higher, although the overall bias is unconfirmed, but this displacement should say to us that we are bullish longer term, but that is of course in the long term. Let's look more shorter term. Okay, so looking inside of this wave, this is obviously a bullish impulsive wave, with the idea that to continue this bullishness we probably want to react from this as a demand. It would definitely be nice to see this be respected as a demand zone, because it's the last sell before a heavy buy. It doesn't seem like there's anywhere else pressing that it could be reacting to, but I'm assuming what you were asking about, Lovemore, is that here it appears that we are distributing in the market. We've had a level of inducement be built up, so liquidity get built. After we've built that liquidity, we've then blown through with high volume. Straight after that, we've come down, we have displaced the low. So in the lower time frame scheme of things, this has become an impulsive wave. Impulsive wave. This should have been a fractal protected high, which has been broken, so we're clearly trading bullish up to something from here. We can see that we had impulsive wave. Maybe price came to mitigate something inside of this wick. Point of interest demand. Price then broke the high, so this should become a protected low. We can then look inside of this as the impulsive wave and say, okay, it would probably be nice to see price come down to now mitigate this potentially as a demand zone in order to continue trading bullish. But where do we want to trade bullish to? That is the pressing question. Probably into positions up here. Now the reason I'm thinking that is just because there's a lot of inefficiency left between these moves, and I think price will more than likely want to fill all inefficiencies before doing anything else. And in order to do that, price will have to come and react to this region. You're looking to take a short at 94.798. So yeah, I feel like what you've probably done is you've taken this entire buy to sell, which is definitely valid. I have just refined my zone slightly more to the very final buy move, which caused the major move lower. So my bias is probably to be bullish, to try and trade price up into this supply zone, where we can then look to go bearish, to trade price down all the way back to the demand zone down here. So that is my bias, that's my outlook on the Australian dollar to the Japanese yen. I hope that made sense for you. If you have any questions on that analysis, make sure to let me know. Now have a sip of some coffee. If you are enjoying the stream, if I could just ask everybody to like and potentially share the stream, if that's not too much to ask for. Love that analysis. I appreciate that, Kyoto. Appreciate that a lot. And I guess a point that I can sort of bring up is on both this one and the dollar yen. So it seems like the yen quote markets, they've been quite hard to analyze on the higher time frames because there's no real direction in the market. It's sort of range bound, it's not showing an overall trend. And when that happens, we don't have to get too caught up. It just means that we have to watch both sides of the market. So rather than only looking for supply zones or only looking for demand zones, we're looking inside for both. And because we need entry confirmation to enter, that is why we can get away with having an arbitrary situation like this, where we're looking to profit from both sides of the market. But yeah, pretty much as we said, just to recap really quick, if we zoom out, we're looking to buy up into this supply zone where we want to find enough supply get introduced to start breaking structure and continuing this bearishness that's potentially being created from the displacement, which should trade us down into this demand zone. And because this seems to be the lowest possible demand zone to be mitigated without breaking structure, this demand zone should then hopefully trade us higher to exceed this final target at least, but with the assumption that we will slowly or eventually trade to this supply zone up here. So another outlook that we can potentially look back on in, let's say, a year's time, where price will have hopefully played out in some way and hopefully followed the bias that we have given. But I think that should cover us for the stream. Again, as we stated, not many questions. The chat's sort of dying off now. Not as many people have markets to look at. And to be honest, I'm running out of markets myself. Any other market we go on to now is going to be sort of like your minor or exotic markets that I personally don't trade, so me doing analysis on them isn't as amazing. Obviously, doing analysis is great practice and a great way to advance your conceptualizations of trading, but regardless, I think we'll look to wrap up the stream here. I'm not going to analyze any more markets now, but if anyone does have any quick questions that we can answer, then make sure to send them through. If not, as I keep stating, make sure you subscribe so you can keep tuning in on these streams. Make sure you look into the description where you can actually find our Learning Lounge, which is a free group chat that you can get involved with, which just has daily updates on what's happening with the business, fundamental news. We notify you when we post things, when we've uploaded on YouTube, some analysis, some potential entry points. So plenty of content in there. But thank you to everyone who has tuned in, who has been watching throughout, who hasn't, whether you've had questions, not had questions, just viewing alone is very nice. It seems that we've had 268 views total. 268 people have come in at different points, so that's great to hear. We have got a good average view duration, so most people are coming in and sticking around for a while, which is always great. But as I said, we're going to look to wrap this up now. So I appreciate everybody watching, and hopefully we will see you through the week when we do our live trading sessions when the market's alive.